Very good evening. You're watching Primetime. I'm Tamanna Inamdar.
And my name is Ayush Alavadi. Let's have a look at today's headlines. The Finance Ministry allays fears over the Financial Resolution and Deposit Insurance Bill. Says it will be more depositor-friendly and provides greater protections.
SEBI proposes to allow mutual funds and portfolio managers in commodity derivatives.
Indian markets post a strong rebound. Sensex rises over 350 points. Bharti rallies over 6%.
Another day and another record for Bitcoin. The cryptocurrency soars past the $15,000 mark.
The political battle in Gujarat reaches fever pitch on the last day of campaigning. Opinion polls predict a majority for the BJP.
8 members of Security Council demand an emergency meeting to discuss President Trump's decision to recognize Jerusalem as the capital of Israel. Well, North Block was in firefighting mode today after facing a lot of flack over certain provisions in the Financial Resolution and Deposit Insurance Bill. The perceived notion is that the bill could be harmful for small depositors. The bill is under consideration of a joint parliamentary committee and is likely to be tabled during the winter session of Parliament. Nikun Jori has this report of what the Finance Ministry has said today.
Calling the Financial Resolution and Deposit Insurance Bill more depositor-friendly, the government has said the FRDI bill brings in additional protection for depositors and in a more transparent way. The FRDI bill was introduced in Lok Sabha in August 2017 and is currently being considered by the Joint Committee of Parliament. This bill will replace the Deposit Insurance Act, which currently insures deposits in deposits of banks to a maximum of ₹1 lakh if a bank or a financial institution fails. There were earlier concerns that deposits would not be protected as the FRDI bill does not specify an amount and leaves the discretion to the regulator, which in case of banks is the RBI. The government has also said that once FRDI bill becomes a law, it will put in place a system which would have an effective and a quick resolution if a financial institution and a bank fails, and this resolution process would obviously be depositor friendly.
All right, now Pradeep Kumar, former MD of State Bank of India, joins us on the phone line for more on the story. Mr. Kumar, thank you so much for speaking with us on Bloomberg Quint. If you can explain for us and to our viewers why these concerns have arisen. Why have we come to a situation where the Finance Ministry and the Finance Minister has to go to this extent and explain that there's nothing to worry about in the bill?
So I think the primary problem in our country is that RBI has never allowed any bank to fail. Whenever a bank was in difficulty, it got them merged with some other stronger bank. And I remember when I was at the State Bank of India 30 years back, we had Bank of Cochin merged with State Bank of India. I think then Bank of Karad with ICICI Bank. And there are several such cases, and the depositors have been protected so far. But I think that's an untenable situation. I don't think there can be a situation where another bank goes and bails out another bank which is failing. See, in the Indian context, if you see now, what is the protection for the depositor? The protection for the depositor is basically the DICGC. And how much does the DICGC protect? It is only ₹1 lakh. What happens, suppose tomorrow a bank fails and the DICG pays 1 lakh to a depositor who owes, let us say, 5 lakhs. What happens to the remaining 4 lakhs? There's absolutely no clarity as of now. If the bank is liquidated, the depositor is an unsecured creditor to the bank, so he'll have to stand in queue. After the IBC has been introduced for manufacturing firms and other companies, this is a resolution mechanism for all financial companies, including banks, insurance companies, NBFCs and all that. Whatever I've read of the FRDI, it says that the authority will fix the amount up to which the depositor will be paid. The balance will get converted into some form of bond or share, which can be redeemed when the bank the bank is in a better position later. The fear is that is going around is the depositor is going to lose his money. But if you see the current situation also, the depositor has no protection beyond rupees 1 lakh. At least this bill will, the FRDI bill will bring in some mechanism where what happens to the remaining amount beyond 1 lakh or whatever amount the resolution authority is going to indicate case by case. So I believe this is a much better step, but unfortunately a scare has been created. The depositor will lose the money. I think people have not lost money so far because RBI use other banks to bail them out. I don't think this is going to work in future. Either there's some sort of resolution plan has to work for the bank, and when there is a resolution plan, there will be a hit for the depositors also. And I think this act will only ensure how is the hit going to be and what form the hit is going to be and to what extent you can protect the depositors.
I don't know if that would assuage depositor fears right now, Mr. Pradeep Kumar, when you say that the RBI stepping in is not tenable. But I think another question which has been doing the rounds is because of the concept of bail-in, where depositors become a part of that group of people who have to help the bank out.
No, see, if the promoter of the bank is not able to bring in capital, what do you do? See, as long, I'm sure in the case of public sector banks, the government will not allow bail-in to happen. It will bail out. But tomorrow a small private sector bank fails, and the promoters or whoever is most banks do not have promoters because many of them, because there are RBI restrictions on shareholdings. If the shareholders of the bank are not able to bring in funds to ensure there's a resolution, then it has to be liquidated or brought down in size. When there's a brought down in size, everybody has to take a haircut. The first haircut is that of the deposit of the shareholders, then maybe the other bondholders, and finally the depositor. Of course, depositor will be ahead of the other two. That is an advantage. But I think we'll have to accept the fact that, like what happens, let us say a company goes into liquidation, don't the shareholders lose? I mean, because they're the lowest in priority, creditors to the company also may have to lose. Here, the bank depositor is a creditor to the banker. So he's like an unsecured creditor. So there is a possibility he will lose. That is why, to ensure that the system works well, there has always been in all major countries insurance for deposits. In India, it is 1,100,000 rupees. I think it is very low, which was fixed maybe 93. It may have to be adjusted. The resolution corporation, if the bill is passed, and the resolution corporation has to take a call, depending for each bank, they might set a different amount. Like in the US, that I think currently it was earlier $100,000. In 2000, after the 2008 crisis, it became $250,000. So that is an amount beyond which I don't think depositors will be protected unless it is going to be a public sector bank. I believe in a public sector bank, bail-in provisions will not be utilized. It will be bailout by the shareholder. Sorry. The government being the largest shareholder in the public sector bank will use the bailout provisions and give capital to the banks. But in the case of private sector, I think it is going to be difficult.
Okay, so I think perhaps, sir, the question is also about a lack of awareness. Most depositors may not even know that their money is insured just for 1 lakh rupees. And from what you are explaining to us, the message for depositors could be that maybe public sector banks are a safer bet.
I always believe that because it has the implicit guarantee. There is no guarantee, but the implicit guarantee of the Government of India. And Government of India is the best creditors anyone can take in the country.
All right. Thank you so much, Mr. Pradeep Kumar, for speaking with us. A lot of clarity there, Ayush, on a big story that everyone has been talking about, that what happens to our deposits. Well, as Pradeep Kumar explained, they were never completely insured in the first place.
Absolutely. Well, the government seems to suggest it's a lot more depositor-friendly. Now, moving on, market regulator SEBI has sought stakeholders' opinion on allowing mutual funds and portfolio managers to invest in the commodity derivative market. The Commodity Derivatives Advisory Committee of SEBI had recommended that commodity markets should be opened up to domestic and foreign institutional investors in a phased manner. Sajit Manga joins in now. Sajit, what can fund houses invest in now, and what exactly are these proposals from the markets regulator?
That's right. Market participants have been asking for allowing institutions like mutual funds and foreign institutional investors to invest in the commodities derivative market. But one of the biggest resistance was coming through some of the regulators like Reserve Bank of India, which was not so keen on it. Now what SEBI has done based on the recommendations of the Commodity Derivatives Advisory Committee, which has recommended gradual by phase introduction of institutions into the commodity derivatives. SEBI is trying to ensure that to begin with, mutual funds and portfolio managers which are under the purview of the market regulator, they are brought into the entire commodities derivative market. The recommendations seek that mutual funds, whether mutual funds should be allowed to have commodity ETFs or open-ended funds or arbitrage funds, commodities, or existing schemes should be allowed to have exposure to commodity derivatives. Now, this is one way of diversifying the entire risk part of it. But again, it is something which is on the drawing board, and it's just a proposal from the SEBI. From the portfolio managers' point of view, portfolio managers or PMS, which has grown to over 1 lakh crores of asset under management, they are not allowed to invest into commodity derivatives, though as per SEBI's regulation, they are allowed to invest in securities which include commodity derivatives as part of it. So even there are certain concerns which have been raised by the regulator. The regulator is trying to figure out in what capacity portfolio managers can invest in it, whether client-specific risk should be taken for commodity derivatives because it's a risky asset in that sense, or whether a pool accounts should be used, or full portfolio managers should be allowed to pool in the resources and take hedge using commodity derivatives. Now, and the kind of leverage that can be taken on the portfolio as well. So these are some of the things which are under consideration. The regulator has asked for feedback by December 31st, and hopefully in 2018 we'll see some of the institutions like mutual funds and the PMS segment getting into the commodity derivative market.
Well, thanks for that, Sajid Manga there with all the details. Now, it's bounce back day in Dalal Street. Benchmark indices rebounded from a 6-week low and ended with gains over a percentage. Broader markets too posted handsome gains. Neeraj Shah sums up the day's market action in this report.
Well, you can call it a bounce back rally, you can call it a rally which was led by what happened to the Asian bourses as well, but across the board in rest of Asia as well as in India, the quantum of gains were between 1%–1.5%. So good bounce back day of trade. Some bit of short covering as well, you would say. So good day on that front as well. But mid caps, small caps participated. Volatility ebbed quite strongly as well in the session today. So those were the highlights for the trading day. Look at that, 1.4%, 1.3% for the mid caps and the small caps as well. Good going. The stars of the day, I would say GAIL, 8% higher, Bharti Airtel, Bharti Infratel, some really strong moves that came in for a bunch of these large cap names. You don't normally see the index move up so strongly without banks participating, but that's what's happened today. So these were the set of stocks which did really well for themselves. Maruti Suzuki, Bosch bringing up the auto end, and as I said, amongst the top 4 or 5 contributors, you didn't have banks. Maybe not ICICI Bank, but otherwise not so much. What else? At the broader end of the spectrum, KEC International, strong moves there. Rain Industries moving back to 103, 190 odd dead levels, and then certain pockets went up. So rice exporting companies, and we had Chamandal Sethia management on Bloomberg Quint as well, who spoke about how the times look very, very good. Exports are very strong. So LT Foods and Chamandal Sethia and a few others did very well. You also had the liquor companies doing rather well for themselves. So GM Breweries up 12%, Radicorp 4%. I mean, as usual, there will be a couple of stocks which should have not done too well. In today's session, the mantle went to Jubilant Foods as well as PI Industries. So these are a couple of names that are a case of sour grapes, but on very high volumes on the bank expiry day. We had a really good day of trade. Doubtful this can happen tomorrow as well, because the shorts, some bit of shorts would be out of the system. But let's wait and watch. At least the downtrend seems to have been broken for now.
Well, a late entrant into the United States, Cipla wants to play catch-up in the world's largest pharmaceutical market. A lot is riding on the drug maker's 3 big launches lined up over the next 3 to 4 months. Speaking of Darshan Mehta, Bloomberg Quint, the company's global CEO and managing director, Umang Vohra, says the aim is to get a quarter of Cipla's total sales from the US within the next 3 to 5 years.
We believe that the US should at least be 25 to 30% of the company, right, in 3 to 4 years.
25%?
Yeah, 25 to 30% is what our aspiration for the company is in the next 3 to 5 years.
Okay.
And, you know, the company is growing, as is the US, but that's where we want the US market to be.
What about margins? You've said that, at least for the near term, margins will be in and around this level. For this year, you've guided for it'll be sub 20%. But do we see the possibility over the next few years that, again, you might inch back to the 22 to 25% mark?
I believe that normal of 24 to 28 today, Darshan, for the rest of the industry, is possibly somewhere the 22 to 24 range.
Okay.
Right? Because post the US price erosion, etc., I think the industry is looking at a new margin normal. It cannot be the same margin normal that happened earlier. And so if it is 22 to 24, depending on the mix of how quickly the US scales up for us and what type of price compression we see in the US, I think Cipla will eventually get there, but we are in no hurry. I think if we are even at the 20 to 22 range, we're actually okay.
No, it's not being the best, Umang. It's basically, I understand what you say is there's a responsibility towards patient, but for a company, there's also a responsibility towards shareholders.
Correct.
Now, if you're saying that you move from 15 to 18%, that's a good thing and you've achieved it. But still, it's subpar because I know that some of them have come down. So I'm just asking, if you're saying that 22 to 24% will be the new normal, you're still below that. So when will Cipla reach that level?
So as I said, we're looking at a 2-3 year window to get ourselves there.
And how do you intend to do it?
Well, I think it'll come out of our mix, our growth. It'll come out of complete control on costs, like we're doing to, even this year and the year before. So all of that will contribute to us getting there.
Well, Lupin's promoters have been on a shopping spree of late. For 17 days in a row from November 13th, Lupin's promoters purchased 50,000 shares, buying 8.5 lakh shares for 70 crore rupees in total. Remember, on November 10th, Lupin received a warning letter from the US FDA on 2 of its manufacturing units. The shopping spree comes at a time when the company's market cap has dropped to 36,600 crore rupees from the peak value of 91,000 crore rupees. Now, in 2015, in fact, Lupin has fallen below Cipla, Cadila, Aurobindo Pharma and Dr. Reddy's in the last 2 years. In terms of market share, that is. Even analysts who gave a 70% buy recommendation on the stock may have cooled off the call. Currently, only 39% of brokerages have a buy recommendation on Lupin at the moment. Steel Authority of India has finalized a 60 billion rupees joint venture with the world's largest steelmaker, ArcelorMittal. According to Bloomberg sources, that is, the deal is said to have been in the works for more than 2 years. The agreement for the automotive-grade steel plant is likely to be approved next week by Sales Board. The 2 steel producers are in talks with the state governments of Andhra Pradesh and Gujarat to acquire land for the project. A joint site selection committee is likely to choose a location within the next quarter. ArcelorMittal and SAIL have not responded to our queries so far.
Now, Infosys wants to use disruption to its advantage. The company's chairman, Nandan Nilekani, wants to go big on artificial intelligence and the Internet of Things. In his first interview after taking over as the chairman in August, Nilekani told Bloomberg that much of the new strategy has already been discussed with incumbent CEO Salil Parekh, and Nandan's own role now is to convince all the big clients that Parekh is the best man for the job. Ruling out an active involvement of the co-founders in the day-to-day running of the company, Nandan said it has always been a professionally run enterprise and there's no reason why that should change now. Now, Bitcoin climbed more than 7.9% as it surged above $15,000 today, extending this month's advance to more than 40%. The price of the cryptocurrency touched a record according to Bloomberg pricing.
Well, what's the reason for the surge? Bitcoin got a boost from a successful test of the Lightning Network, which promises to provide a new way to pay with Bitcoins. The technology would move some transactions away from the blockchain by allowing buyers and sellers to transact privately and later broadcast their activity to the public network. The largest cryptocurrency by market value has soared from less than $1,000 at the start of the year, up more than 1,300%. The cryptocurrency is trading close to 15,550 currently. Now, just to understand yet again what this surge is all about, Sathvik Vishwanath, co-founder and CEO at Unicoin, joins us. Now, Sathvik, thanks so much for speaking with us on Bloomberg Quint. I would have asked you the typical question, oh, yet another day, yet another milestone for Bitcoin. But I need to understand this lightning change, and also the second thing I want to ask you is about moving away from that distributed ledger technology to this private transactions. How is the entire Bitcoin market actually responded positively to something like this? I would imagine that this is a cause for concern. Okay, I think we're not getting your audio at the moment, Sathvik. What we're going to do is we're going to try connecting to you in a bit, but it's an interesting development from Bitcoin. I can imagine, well, all of those who invested in it a long time ago would actually be watching this very closely. Sathvik, if you can hear me this time around, I wanted to start by asking you that, well, essentially, yep, we can hear you as well. What I wanted to understand from you is that this successful test of the Lightning Network, which is a completely new way to pay with Bitcoin, isn't that really a cause for concern rather than a very positive development, considering you're moving away from the original blockchain technology?
Definitely not. See, the entire value proposition that the Bitcoin is bringing to table is the fast and free transactions. But on the other side, we also need to understand that the blockchain records every transaction that is happening anywhere in the Bitcoin network. And the size of the blockchain is growing on one side, and on the other side, we can do about 2,000 transactions per 10 minutes, so which is definitely not sufficient at all, no matter how you see it. And because of this, we were struggling with very huge mining fees. As of now, let's say if I need to send you a Bitcoin, probably I will lose about 500 rupees in just the mining fees itself. So given this situation, and Bitcoin is more meant to be traded at a much micro level than the macro level, right? So I definitely think the solution like Lightning Network was essential. So what Lightning Network does is it establishes the channels between the parties, and that particular channels being connected will become like a mesh network to do the transactions. And finally, the square off will happen and it get committed to the actual Bitcoin network itself. So essentially, you're not trusting, you're not really trying to trust a person, right? So here you're just trying to trust a network again, but it just helps with faster transactions and cheaper transactions.
Okay, Sathvik, for a lot of people who might not get into the details of Bitcoin and what are the new things in it, a lot of people right now are interested because this is something which has prices soaring day in and day out. And a lot of viewers perhaps right now are excited or thinking about getting onto the bandwagon. What are the warning signs for them? Is it now too late to get on it? Is there a larger upside? And what are the precautions people should take?
We don't really have a precedence of such kind of rise in any kind of asset class. So given this situation, I mean, we don't really know whether this is at the start of the rally or it is at the end of the rally. I mean, every day we just wake up to see something new and a new high, and that has been like this since more than a week already. And today it is about $15,000, which pretty much like unpredicted, I would say. And yeah, I mean, we don't really know, but I strongly feel there definitely is a correction. It cannot just keep on happening like this forever. But probably this time, the correction may not be as strong as the ones we have seen in 2013 and 14, where the price of Bitcoin overnight has crashed by 80%. Probably now Bitcoin will be much more stable than how it used to be.
You know, it's Sathvik, Tamanna was obviously highlighting, well, if there are any worrying signs. But although we see this surge even today, well, the news that seems to also grab headlines about Bitcoin is the fact that nearly $64 million in Bitcoin was stolen by hackers in a very professional attack at a Slovenian-based Bitcoin mining marketplace, NiceHash. They've confirmed this. They're saying, have some patience, we're going to investigate it. Despite, well, stories like this as well, it seems, well, the Bitcoin value seems to be immune to stories like this as well. But this is also concerning to some extent.
Yeah, I definitely think so as well. But on the other side, this is not the first time where we are hearing about some kind of hack issues at all. And whenever we have heard, actually, let's say there was an issue with Bitfinex, which is one of the world's largest exchanges in 2016, I think. So where, yeah, the Bitcoin did plunge about 10-15%, and then it just got back in a couple of hours. And again, there was an issue with China trying to regulate the Bitcoin exchanges because they were not allowing the exchange to happen. And there again, there was a small plunge, but again, it got back. So probably, I think, as the Bitcoin network is growing much more bigger, such kind of news and to what extent the Bitcoin network can actually take that kind of news, probably it's not mattering much at all.
All right. Thank you so much, Sathvik, for coming in on this debate. Of course, as far as Bitcoin is concerned, it's been described as a religion. It's been described as something which is an option for those who want to bet. So tread with caution is all we would say. Now, in some national news, campaigning for the first phase of Gujarat Assembly elections ends today. Prime Minister Modi brought his campaign to a close with a rally in Surat, while BJP President Amit Shah campaigned in Saurashtra. A total of 89 seats out of 182 from Saurashtra and South Gujarat go to polls on Saturday in phase 1 of the elections. Opinion polls indicate a win for the BJP, but with a smaller margin than before. And the Quint's Rahul Nair has filed a ground report from Ahmedabad ahead of the first phase of polls. Take a look.
2017 is drawing to an end, and with it, a major political upheaval is being scripted right here in Gujarat. After 22 years of rule, BJP is facing anti-incumbency in the form of partidar agitation, backlash against GST and demonetization, and not to forget an overall economic slowdown, rising prices of basic commodities, rising unemployment, amongst major other factors. The Congress, on the other hand, is having a brilliant time campaigning over here, especially Rahul Gandhi, who's leaving a tremendous mark on Narendra Modi's territory. The BJP, on the other hand, is having a difficult time trying to placate the partidar sentiment and angry businessmen from South Gujarat who were tremendously hit by GST. The Congress has gone a step further and promised Patidar's reservation in their manifesto, and Hardik Patel is out on the streets trying to convince every single Patidar that he meets not to vote for the BJP. The BJP, as per the opinion polls, will retake Gujarat, but only with a small margin. What needs to be seen is how Gujaratis will go out and vote, especially on Saturday when the first phase of polling will begin. Will they embrace Vikas, or will they show it the door?
Well, there are a number of polls which are out by now, 5 in all, pre-survey polls. What are they saying? Is it really that close of a fight? We're going to get into some of that number crunching up ahead on Primetime Debate. Yashwant Deshmukh of C Voter and political analyst R. Jagannathan will be joining me up ahead.
Well, moving on to top international news, 8 countries of the 15-member UN Security Council have called for an emergency meeting to discuss US President Donald Trump's recognition of Jerusalem as Israel's capital. Trump's decision has sparked widespread criticism, not just from the Middle East, but from the global community. Late last night, in an act of defiance, Donald Trump directed the State Department to start making arrangements to move the US Embassy from Tel Aviv. He called it a new approach to the conflict between Israel and the Palestine.
After more than 2 decades of waivers, we are no closer to a lasting peace agreement between Israel and the Palestinians. It would be folly to assume that repeating the exact same formula would now produce a different or better result. Therefore, I have determined that it is time to officially recognize Jerusalem as the capital of Israel.
Well, it's been a mixed bag of appreciation and criticism of that move from across the world. While Israeli Prime Minister Benjamin Netanyahu welcomed the move, Palestinian Authority President Mahmoud Abbas said that the announcement was tantamount to a U.S. withdrawal from the peace process itself. President of Turkey Erdogan has said that the move will throw the region into a ring of fire. He also questioned the rationale behind that stance. India, meanwhile, says that its position on Palestine is independent and consistent and will not be determined by any third country.
Well, that's all the time we have this evening on Prime Time. But up ahead on Prime Time debate, we're going to talk about that big Jerusalem jolt as well. Of course, first up, we're talking about Gujarat and is that battle so close? But also on Jerusalem, we're getting the Palestinian side and the Israeli side and finding out from them how they see this big move. So that's up ahead on Prime Time debate. We're right back with that, so don't go away.